Hey, what is going on, guys? This is Sumner Healey here, and what we're gonna do, I know I'm wearing cowboy hat, kind of weird. What we're gonna do is review my trades for this week. This is from 422 till 426, 2019. Let's dive into the charts. I'm gonna show you guys exactly the trades that I took this week. So yeah, let's go. All right, what is going on, traders? So we are in my screens. I'm going to show you guys all my trades for this week. I figure doing daily trade videos might not really be worthwhile, being that most of my trades are multi-day holds. Majority of these, actually all of these for this week, are all utilizing options. And I'm going to show you exactly what I traded. First, I want to show you guys the weekly P&L. So you can see from Monday until today ended with a total of almost $1,400, $1,369. This is on about a $16,000 to $17,000 account that I'm trading currently. So not a bad week in terms of percent return. So yeah, pretty pleased with my performance today. Had a bit of a or this week rather had a bit of a blunder today, which we will cover. Implemented a few new strategies I was playing around with, and obviously not big enough sample size to totally write them off, but did not reflect well on the P&L for today. So, anyways, let's dive in with one of my first trades for this week, which is this Qualcomm. This has been super hot with the 5G news that's come out with Apple. Obviously, massive gap up. Middle of April, was not long prior to that. Was looking at it long for kind of like a gap and go strategy. And this is something that I play pretty often, whether it's an earnings winner or a news winner. You have that big gap up, potentially breaking out to yearly highs, some cases all-time highs, or maybe just breaking out of some kind of wedge or flag pattern that's been building on the daily or weekly chart. Usually you want a strong news catalyst, but also a nice technical breakout. Again, doesn't always have to be all-time highs. Wasn't the case on Qualcomm. All-time highs is about $100. So this was more of like a yearly breakout. And then what we like to see is some kind of consolidation, a little bit of healthy rest. We want to see us hold these gains. It's okay if we fade into this gap a little bit and fill some of it. That's totally normal. But what we want to see is that we stay in this pocket and rest. And that's exactly what we got in this Qualcomm. And so I ended up taking this long 418. So the end of last week was long 5 contracts of the 85 calls expiring in June. And so we'll zoom in a little bit here on what I was looking at. So last week, we had this really nice, just kind of opening range consolidation. And so I was watching this for like about the first 30 minutes of the day. Ended up getting my first entry in on this candle in the 79s, risking these lows right here, so 76. And then come Monday, we had a really nice gap up. And what it ended up doing was actually covering this up or closing it out, potentially too early on this gap up. And what we got here, I'll zoom in a bit more. Um, I really just mismanaged this trade. And so let's see, where are we? Yeah, we're right here. So we had this nice gap up and ended up closing it out when we just started sitting here. I thought we were going to melt down out of this little consolidation. And so I ended up closing this out. I was still unsure of what the indexes were doing. It looked like the Qs had broken out to all-time high. SPY was kind of lagging. We've had a massive run and we're sitting up close to highs, and I had a pretty big basket of long stocks, and I just wanted to be careful and cover some of this. And so I did. I took some of this off in here to close out those 5 contracts for a pretty nice gain. And then what it ended up doing is, again, this is a bit where I kind of mismanaged this trade to a certain extent. What I should have done is taken a partial off, put in a stop closer into the 80s, nice psychological number, and let it roll out from there. But I ended up closing out that whole position, and then I rolled up and rolled those profits into the 90 calls closer towards the end of the day. Once I realized, it doesn't look like we're going to break down out of this 8150 pocket, and this is where things got even worse on this trade. So again, we have a very nice gap up. I'm in the 90 calls. I'm in 5 contracts once again. I rolled up with a lot of the profits from that earlier trade, so I'm in a really good spot here. and I ended up closing this trade out on this candle here. Again, a lot of these bigger names obviously are going to be highly correlated to the indexes, especially the index that they pertain to. And I just wasn't really liking the action that I was seeing. I was also leaving the house early that afternoon and didn't really want to be micromanaging this on my phone, and ended up closing it out in the 84s, for a healthy $500 gain. And obviously, yeah, not a good trade. This was actually probably one of my worst trades of the week. Even though we ended green on this ticker, my management was so horrific. And I've noticed this come Mondays, my management is usually off from not trading through the weekends. And so typically if I'm putting on a trade on a Monday, I'm going to be much more nimble. But I definitely see this still crop up on anything that I've held from the previous week, especially if I'm in profit. I just get overzealous and I really mismanage it. And this is probably one of my biggest weaknesses and areas that I've been focusing on in 2019 is learning how to manage a good trade. Man, once you learn how to close out a bad trade, you're on your way to profitability. But if you really want to eke out the best results that you can from the market, it's not about having a massive win rate. Most traders with huge win rates, all it takes is one bad loser and they can wipe out a lot of those gains. It's about having, a moderate win rate, but learning how to maximize your winners. And this means allowing them to run, moving your stops, rolling up with profits, adding to winners. And this is an area that's been really, really hard for me to focus on. But I have made subtle improvements, but then a trade like Qualcomm comes around and reminds me that I still don't know shit, and I have a lot to work on. So that was Qualcomm. Next trade that I rolled in from last week into this week was Best Buy. Again, this is a continuation of that gap and go strategy, which I play pretty often. So you see we had this nice gap up beginning of March, end of February, faded back into that gap a little bit, consolidated, and just had this really healthy move. And so what I was looking at here is we had this nice flag pattern running into the 50 MA. And what I ended up doing is taking this long on Friday as well. So I got in the mid 73s, 10 contracts, and I had the 75 calls on this one expiring in June. And so my risk was down in these, like the 72, essentially, 72 area. And you can tell we were playing around in that area, but I don't close out a trade just when it touches a level. For me, it's not that black and white. It's about how it reacts at that level. And so we've been toying around here, and it would just snap right back up. Again, we came down, snap right back up. To me, this is actually a super bullish sign. The market's just in a period of exploring, and it's kind of looking for, okay, where's going to be some demand? And then it finds these pockets of demand. And if it can actually reclaim new highs like we did here on Tuesday, that's really, really bullish. And as you see, on Wednesday, we got this nice gap up. The second that I saw this couldn't hold this gap up, I ended up selling at about 75 for about $1,000 trade. So it was about 100% gain on my options, which was a really nice move. And then we ended up just, collapsing. The push behind this just wasn't really sustained by anything new or noteworthy, and so it sold off. And honestly, this thing has had a pretty ginormous run. And I think it needs a bit more rest before we test these 84 highs up here. So yeah, wasn't surprised to see this at all. Actually like this setup coming into coming weeks. If we can reclaim the 73s and hold, I really like Best Buy for a test of this 84. And so this is definitely something which I will be keeping on watch. But yeah, you can see this pattern repeat itself time and time again. And it's really probably about 90% of what I trade is this gap and go pattern. And you just get continuous setups on here. I really like looking for, if I don't catch that initial consolidation and run, what I look for is multi-day rest periods. And so when you get us just resting, usually I like to look for 2 to 3 days of just pure rest, tight range, and then usually we can get a really nice risk reward on these trades. Stop beneath the lows of these candles. I like to pair it with like a nice psychological number, so about $70 in here, and yeah, you can get a really nice ensuing move. And so that's about what we saw here as well. So all in all, good trade. Managed it pretty well. One thing I could have done better is when I got this confirmation here, we make this lower low, and then we rip and make a new high. This is actually a place to add, in my opinion. From my experience of trading this setup, that is a really good place to put on a little more risk. And I did not do so in that case. But on to the next, we had Salesforce. Man, what a beautiful pattern we have been forming in here since March. Just this super tight flag, and I've been watching this on the weekly. This is where it caught my attention. Running into this moving average here, just this beautiful range. Ended up taking very small size with a plan to add on this. I actually got in on the 17th of April. We had this sell-off. I was a little preemptive here, but I took one contract of the 165 call with the plan to add. And to be entirely honest, I kind of left this in my basket of swings and didn't really fully manage it, and let this thing go without adding into it. Ended up selling in here in the 162 region, somewhere in the mid 162s. For a decent 35-40% gain on my option. So it was not a bad trade, but I was running with such small size. When we got this confirmation down here, that was at the point to really put on a little more risk, like I should have with Best Buy. So you're going to see a theme throughout all these trades. While I had a nice green week, and I've been having nice green weeks, there's still so much for me to eke out. And a lot of traders fall into the trap of thinking they need to size up to bring their P&L up. The reality is a lot of times it's just about honing in on your management. I think my P&L could have been 4 to 5x what it was, maybe even more, had I just managed my trades better. It's really not about playing the size game until you've dialed in your trade management, and nothing else to really say on that one. All right, here was a nice loser for this week. This was, as I like to call it, the gaggle. This trade, honestly, from trade idea to everything about it was just poor, in my opinion. I got in about a week and a half ago on the break of this flag here. I stay away from these bottom bouncer garbage stocks. Picking bottoms is something that I learned years ago. It just doesn't work for me. I don't think it works for most, but it definitely doesn't work for me. And this was testament to that. So ended up taking 10 contracts with a 29 call, I believe. And actually, sorry, no, this was on the 15th. Yeah, this was on the 15th with a 29 call, 10 contracts expiring in July, and ended up taking it off on this dump in the 23s. This is just not a bread and butter setup for me. I think I just got a little overzealous and saw a lot of option flow coming into this. We had some pretty sizable sweepers coming in continuously, days on days on days, and I think I based a little bit too much of my trade decision off of that and kind of piggybacking off of some of that bigger money. And this was not a setup which is in my wheelhouse, not something I trade, and just really pleased with the way that I took the exit. My risk level was the 23s. You see, we've tested 23s multiple times. And when that snapped, it snapped freaking hard down to 18. So this was about $1,000 loss for me. Again, I had decent size on it. Was able to recover from it just fine. Didn't ruin my week. I could have let it ruin my week had I not stuck to my rules and taken that exit. So proud of how I managed this loss. Not pleased with my execution or entry or trade thesis, and just being that it's not even something that's within my trading plan or playbook. So we're going to write this one off as essentially an F if you were to give this a grade. So next trade was a mat. So you guys will soon learn I like to pronounce all of my tickers. Man, what a beauty of a chart, my goodness. So AMAT, again, this is a classic setup for me. We've got this gap and go. We've been running. We come up and we have a nice, essentially, 3 to 4 days of rest. These are really the candles that I'm looking at. And most of my entries are going to be coming off of the 1 hour mark. I build my trade ideas off the weekly, then the daily, and then my entries are going to be coming off the 1 hour and the 15-minute. What I liked here was we had this nice dip, and then we started to pop, and I got long into here, the mid 43s. Was in this 10 contracts, 45 calls expiring in May, I believe, on this one. I was looking for a little bit of a faster move, just going off of this kind of setup, and it's kind of like a do or die. It's very black and white. We should break out of this consolidation, and if we don't, and we just sit here, Theta is going to eat my option to pieces, and I'm just going to get out of it because it needs to make that move quick, and if it doesn't, yeah, that's just not doing what it needs to do. So yeah, took this off into, we'll zoom in a little bit on the 5-minute, took this off into the 45s, and we ran a little bit more, about 60 more cents. Took this off, I believe, for about a $700 or $800 gain. It was about like a 70 to 80% return on my options. Again, I actually don't have all the orders in front of me, so I'm not entirely sure. But yeah, this was just a massive parabolic move. Oh, you know what? Actually, sorry. I took half off into the mid 44s, and then I took the other half off into the 45 region, and I was all out of this one. This was just, I mean, there was so much green on this chart. The range on AMAT is usually, no more than a point to maybe 2.5 points in a day. This was a pretty big move. So was totally okay taking this off, and I actually think I managed this just fine, in my opinion. This is a pretty parabolic move. Majority of stocks are going to sell off pretty hard from this. And then we had a nice gap up the next day, and it just crapped out along with the market. So next trade was RYX. Oh, sorry, no, it was not RYX. Let me see, what was this? This was PYX, my bad. PYX. Man, this is actually. So I've rolled up. I'm still in this. I have the what calls do I have on this? I have the 25 calls at 95 cents, and I got 10 of them. So let's backtrack a little bit here, though. We will pull this up on the 15-minute. Actually, we'll zoom out. Daily chart. This thing IPO'd back in the fall of 2018. Had a massive run from $20 to $52. This is like a vaping company, loosely associated with some marijuana products, I believe. But mostly, I believe they just make vapes. Pretty sound company, actually. And so what cued me in is, I believe it was, I want to say it was Goldman Sachs, or one of these bigger banks, increased their position in this substantially. And that's why we got this massive move here on Monday. And so this cued me in. Really healthy volume. We haven't seen volume like that in a while. We had really healthy volume. Obviously, the range on this was huge. This thing's got a 9 million share float, so when it runs, it can run freaking hard. So I got in on this flag here at about $20. I had the 25 calls. I was in at 75 cents. I had 10 of them. And then I ended up actually closing out this position for a profit somewhere in here once we just started collapsing. Had a massive drop in the morning, reclaimed it, couldn't break out of these opening, this open range right here, and then proceeded to fade off of that. So I ended up closing this out. And then on Wednesday, once we held these lows, we were holding really the round number of 20. I rolled up 5 contracts into here, so I took a half a position. This is actually a new strategy that I'm playing with. When I roll up, only rolling up with half a position, just to manage some of my winnings from that previous trade when I roll up, and not really betting the house or betting the farm on this trade with my previous profits. So I rolled up 5 on this, and then added another 5 this Friday in this 21 region. And yeah, so far this trade's working out really nicely. Ended up closing it out for a very modest gain. I think it was like $120 or something like that. Nothing massive. But yeah, just actually really pleased with how I managed this, to be honest. Definitely you can get a little too micromanaging on some of these lower time frames when you have swings on, and that's something to look for. But I just felt like the fact that we faded off of this opening range, couldn't hold this, it looked like it was going to have a chance to break this 20 and really flush. And if that was the case, I did not want to be stuck in my relatively illiquid options. They kind of trade like molasses on this thing. So I did the diligent thing and took it off in the mid 20s up in here. All right, so let's move on to this new strategy, which I mentioned that I put into place, or am putting into place. And this is something that I actually learned from Smash the Bid. And this is the idea of RTZ size, which is essentially the idea, some would call it lotto options, but essentially it's allowing yourself to take an option to zero. And the second you get into the trade, that is your risk. It is zero. You will let that option expire worthless, and your risk is defined and set, which I think is beautiful. It takes a lot of the thinking out of managing a trade. It's just purely directional at that point, which can be really, really nice. And all you have to do is manage a winner. And so what I ended up doing is on this Netflix, obviously on the daily, we've been in this just nasty range for a while. Earnings last week, we got a nice little shove. It was a little confused in here, and then looks like we were going to take out these 380s. This has been a level that, man, we have just toyed around with forever. 360s and 380s have been the kryptonite on Netflix. So we got this pretty nice breakout. Wasn't anything too incredible, but it definitely got me cued in. And so what I was watching on Wednesday was if we were just going to hold this opening range here. We had these pre-market lows at about 380, obviously an important number, and we're just kind of dicing in and around here, in and around here, in and around here. And it was actually on, I believe it was this push on here, where we came down, dipped into the 379s, and then we pulled up back into 380s, and I'm thinking, okay, this is the moment that Netflix is really going to go. I think we could take out these 385 highs, and 400 might not be out of the cards. Netflix can put on 15 to 20 points on a big day, so I'm thinking this can really go. So I took one contract, RTZ size. It was a 385 expiring this week. It was a call. It was $200, which is within my risk parameters. It's about like 1.25 to 1.5% of my account. So I felt comfortable RTZing that size, and just got that eternal dump. Like, it just didn't stop. But again, the concept with this RTZ trade is you don't manage it. You let it go to zero, because there is many a times where you get these massive V bottoms and it just goes. And so when you take an RTZ trade, you're assuming that risk. You're assuming it goes to zero. You let it be. I did just that. We had actually had a really nice day today. I wish I had a little more time on these options, because in my opinion, it is just a matter of days, maybe weeks, until we break out of these 380, 480 highs, and we're off to the race to 400, in my opinion. All things staying constant in this market, I would assume that's where we end up in the next little bit. So that was, $200 loss on this one. Let it expire today. And I followed the same strategy on 3M. They're laying off like thousands of employees. They had lackluster earnings. Obviously, market didn't like it. My first thought is, man, we got a lot of air on this chart. Like, this thing could go to the 180s, or you have a little bit at 187, you got the psychological number at 185. There just wasn't much holding this up. So my first thought coming into the morning was, okay, this is a short. This is a no-brainer short. Let me take all my lines off this chart so you guys don't have to look at this. Man, this is a long-winded video. If anyone's still watching this, I'm thoroughly impressed. I guess this was really more for me than anyone else. So yeah, we tried popping over these pre-market highs here, which I typically use for a guide on these bigger names. They definitely respect them pretty nicely. So yeah, we pop over into the 191s. We fail in the 5-minute, can't close above it. We get that second test here. I'm taking one put at the 185s. Definitely a lotto play. I mean, I bought these things for 10 cents. If we had gone to that 185, could have been a massive, 10-bagger on this thing. But yeah, that was the trade. This is RTZ. Let that bad boy expire. I actually bought it for 12 cents. So let that thing expire for a $120 loss. And this is where it got a little bit funky for me. So I did not follow the RTZ rules at all. What I ended up doing was we came down. I'm looking at this for that 189 break. We got to break these pre-market lows. This is its moment. This is do or die. We've rejected these pre-market highs and we've just stuffed. And it's tried multiple times. You get these 3 attempts here every time, lower high, volumes fading on this thing. I'm thinking, okay, this is going to break down. And then we get this nice candle. We have an increasing volume from that previous candle. We come in with, about 100,000 shares in this thing, and it can't do it. So I ended up closing out this RTZ position, buying calls in here. I bought the 195 calls. Again, RTZ, I bought these things for about 10 cents. Same concept. Let these bad boys ride. Ended up just being a range day on this thing. And this is the issue with RTZing, especially on a Friday with these lotto options, is you can't be trading something that's range bound, because even if you get the move past 11 o'clock, theta is going to have eaten your options to pieces. And so it just doesn't matter. I mean, if this thing ran to 195 at 11:40, well, that's Pacific time, but if it ran there at 2:30, 2:40, it just doesn't matter. You're just not going to get anything out of this option. You're going to get very little. And so trading it on a range-bound stock is, it's just going to really kill you. And this was a testament to that. So what I like about this trade, I actually really like the short thesis here. I think this was such a beautiful setup. I would take this day in and day out. I love this setup here. Just didn't work. I don't like the fact that I closed out an RTZ position, didn't follow my rules, and then re-entered another one. What I should have done is actually kept that RTZ short on and then taken an RTZ long, and you just let both of them work. Because had this thing made that crack, I let my RTZ call expire worthless, and now my short is in the money. That's the name of the game with RTZ stuff. So something I'm experimenting with, taking very small size. You could paper trade this if you wanted to kind of get a feel for it. That's probably a little more of a conservative approach, or you can just put a little bit of small capital on the line. Personally, I'm not a big advocate of paper trading. I just don't think it emulates anything that's realistic about trading, being that the cognitive side of trading is so much more important, and that's fueled by emotions, and you just have no emotions when you're paper trading, or very little. That was my week in review. I hope you guys enjoyed this. If you guys do, let me know. I may also make a video this weekend covering my current holdings, if that is of interest for you guys, so you can kind of see how my trades shape up over time instead of doing this hindsight stuff. Let me know. Hope you guys enjoyed this. All in all, great week. Hope you guys had a good week trading as well. Remember, it is not about how you end the week with a green P&L or a red P&L. What it's about is, how did you manage your risk throughout the week? Did you follow your plan? Do you even have a plan? That's the shit that matters. Everything else is just noise that will fix itself out in time, being that you manage your risk and follow your plan. All right, boys and girls, I will see you guys later. Hope everyone has a great weekend.